Stop. Put down your remote. Tell your wife you'll do the dishes later. If you have to go to the bathroom, take your phone with you and lock the door. Because what I am about to reveal, what I am about to expose, regarding the institutional panic currently sweeping through the trading floors of Wall Street is so urgent, so critical to your financial survival, that everything else in your life just became secondary. We need to talk about the phone calls. And I need you to lock in, fully focus, and give me your undivided attention for the next 15 minutes. For the last 48 hours, my encrypted inbox has been flooded. I'm receiving frantic reports from private wealth clients, from high net worth individuals in London, Zurich, and New York, and even from regular retail traders holding significant positions in their IRA accounts. The story is identical in every single email. It is consistent, it is coordinated, and it is terrifying. They are telling me that their brokers, the same people who haven't called them in 6 months, are proactively reaching out. Now, pause and think about the psychology of the brokerage industry. If you have been in this game for a long time, you know the rules. You know that brokers usually only call you for two specific reasons. One, to sell you a fee-heavy garbage product that you don't need so they can hit their quarterly quota. Or two, to margin call you when you're broke and force you to liquidate your assets at the bottom. They do not call you to give you free winning advice. They do not call you to make you rich. Benevolence is not in their business model. But suddenly, this week, the phones are ringing off the hook. Ladies and gentlemen, welcome back to Veiled Wealth. We are hearing specific names floating around the rumor mill major bullion banks, tier 1 wirehouses, and the script they are reading from is identical. It is precise. It has been written by a legal team and a behavioral psychology team. They are calling clients who have held silver through the dark years. They are calling the diamond hands, the clients who bought at $20, who held through the boredom of $30, and who are now sitting on massive, life-changing gains at $80. And what are they telling them? Are they congratulating them? No. They are telling them the party is over. They are telling them, get out now. But wait, it gets darker. They aren't just telling them to take profits. No, they are going a step further. They are actively recommending that aggressive clients consider initiating short positions. They are pitching put options. They are pitching inverse ETFs. They are telling their own loyal clients to bet against the strongest bull market in a generation. The language they are using is designed to bypass your logic and hit your reptile brain. They aren't saying, we expect a pullback. They are using words like meltdown, structural liquidity event, cascading failure. They are painting a picture of a catastrophic flush that will wash away all the gains of 2025 in a single trading session. I want you to pause. Step back from the fear they are trying to inject into your veins. Take a deep breath and think like a homicide detective. Ask yourself the most important question in finance, the question that solves every crime. Cui bono? Who benefits? Since when do the big bullion banks care about your financial well-being? They didn't call you when silver was at 18 ounces and tell you it was the buying opportunity of a lifetime. They were silent. In fact, they were publishing reports saying it would go to $15. But now that silver is at $80 and ripping higher, now that the COMEX is being drained and the Shanghai spread is blowing out, suddenly they are your best friends? Absolutely not. Do not be naive. This is a trap. They are not calling to save you. They are calling to save themselves. They are frantically trying to manufacture sellers because they are desperate for buyers. You have to realize the physics of the market. For every seller, there must be a buyer. If they are telling everyone to sell who is planning to buy, they are. They are trying to create a wave of retail panic selling to provide the liquidity they need to exit their own toxic short positions. We estimate they are net short roughly 4.4 billion ounces of paper silver, a metal that is physically disappearing from the vaults. Every single dollar the price goes up costs them billions in margin calls. They are bleeding out. And the only way they can stop the bleeding is to trick you into folding your winning hand. And the weapon they have chosen for this psychological operation, the boogeyman they are using to scare you out of your position, it is a technical, bureaucratic event called the BCI rebalancing. They are holding up this rebalancing event like a loaded gun to your head, claiming it will trigger a $6 billion dump that the market simply cannot absorb. But is it really a meltdown? Or is it the most sophisticated bear trap we've seen since 2011? To dismantle this lie, we have to look under the hood. We need to talk about the Bloomberg Commodity Index, or the BCI. To the average person, BCI sounds like boring financial jargon. But to the big money, it is the Bible. It is a massive, passive, algorithmic beast that manages roughly $108 billion in assets. This is money that doesn't think. It doesn't analyze charts. It doesn't watch Veiled Wealth. It simply tracks a basket of commodities according to a strict set of rules. And because it is a passive robot, it follows a rigid calendar. The The most important line of code in its entire software is the January rebalance. Every year, in the first weeks of January, this robot has to perform a maintenance check. It has to look at its portfolio and adjust the weightings. And this is the fact the brokers are screaming about. For the year 2026, the governing committee has decreed that silver's target weight must be cut. Technically speaking, the target weight for silver is dropping from roughly 4.49% down to a new target of roughly 3.94%. On the surface, this looks like a straightforward sell order. The brokers are shouting, "Look, the robot is programmed to sell. You have to sell before the robot does." They are framing this as a vote of no confidence, but that is the deception. The robot isn't selling because silver is bad. The robot is selling because silver was too good, because silver performed so spectacularly well in 2025, because it outperformed almost every other asset on Earth. It grew too big for the basket. It is the penalty of success. But the brokers aren't telling you the nuance. There's a specific mathematical error floating around social media right now. People are saying, oh, the target is only dropping by 0.5%. That's tiny. It's only $600 million. Why is everyone panicking? The brokers love that you are confused, because the people saying it's only 600 million are wrong. Now let's do the real math right now. You are forgetting price action. When the year started, silver was sitting quietly, but then the rally began. Silver went from $30 to $40, then to $60, then to $80. It more than doubled in value. Imagine a pie chart. If one slice of the pie doubles in size while the other slices stay flat, the winning slice expands. It takes over the plate. By December 2025, the effective weighting of silver had ballooned to nearly 9% of the total assets under management. So when the rebalancing robot wakes up in January, it sees that silver is hogging 9% of the room. But the rulebook says it is only allowed to have 3.94%. The robot doesn't have to sell 0.5%. It has to sell the difference between 9% and 3.94%. It has to dump roughly 5% of the entire $108 billion fund. That is a sell order of roughly $6 billion. If you convert that into paper contracts, you're talking about roughly 78 million ounces of silver that need to be puked out by this index. This is why the brokers sound so confident they see this wave crashing. But this is where the trap closes, because in financial markets, volume is not the same thing as impact. Just because someone has to sell $6 billion worth of stuff does not mean the price has to crash today. It depends on when they sell it. And this is the secret that JP Morgan is hiding from you. They are pretending that this $6 billion sell order is hitting the market right now, this week, all at once. But ask yourself, does a fund manager with billions of dollars wait until the last minute to execute the biggest trade of the year? No. We need to talk about front running. The BCI report was published in October 2025. The moment that report was published, the smart money started moving. They didn't wait for January. They spent November selling into strength. They spent December selling into the rally. They slowly, methodically offloaded that exposure while the price was ripping higher. They were feeding the ducks while the ducks were quacking. So by the time we actually get to today, January 8th, 2026, the vast majority of that selling pressure has already happened. The market has already eaten the $6 billion meal. It is digesting it right now. What is left for this week? Only the dumb money, only the strict passive ETFs. And this reveals the true nature of the broker's call. If JP Morgan knows that the smart money sold in December, why are they telling you to short now? Because they want you to sell the bottom. They want you to panic, dump your shares into a market that is already priced in. They are recruiting you to be the victim in a game of musical chairs that ended 10 minutes ago. We have debunked the timing. Now we need to talk about the buyer. While the West is obsessing over this paper shuffle, there's a force in the East that couldn't care less about the Bloomberg Commodity Index. There's a buyer who doesn't use algorithms. There's a buyer who uses ships. We need to pivot to the bullish reality. We need to talk about the China shield. Right now, as we speak, the Shanghai Gold Exchange, the physical hub where metal actually changes hands in China, is trading at a massive premium over the COMEX in New York. We are seeing a spread of nearly $7 an ounce. Do you understand the physics of what that means? It means that a bar of silver is worth 7 more the moment it crosses the Pacific Ocean. It is an arbitrageur's dream. It is free money. Now, think about what the BCI rebalancing actually does in this environment. The robot comes in and dumps paper onto the New York market. This pushes the COMEX price down. The brokers cheer. But what have they actually done? They haven't destroyed demand. They have just put the metal on sale. They have widened the arbitrage spread from 7 to 15. They have just turned a profitable trade into the trade of the century. Every single time the price dips in New York, the vacuum cleaner in the East turns on full blast. The Chinese state-owned enterprises look at that price tag and they scream a buy. The dump that the brokers are warning you about is actually a gift to Beijing. It accelerates the drain. It speeds up the very shortage that drives the price higher in the long run. The BCI is literally transferring wealth from Western pension funds, who are forced to sell low, to the Chinese government, who is happy to buy low. And why is China buying so aggressively? Because they are trading for national survival. They control 80% of the global solar panel manufacturing capacity. They know that without silver, they cannot build the solar panels. Without solar panels, they cannot achieve energy independence. So when they see a rebalancing event, they don't panic. They laugh, and then they buy. So we have exposed the broker hoax, we have debunked the math, and we have identified the buyer of last resort. What is the final verdict? What should you do when that phone rings? You have to remember the statistic that keeps the risk managers at JP Morgan awake at night. They are short 4.4 billion ounces. They sold promises they cannot keep. They sold metal they do not have. And now with the price ripping through $80 and inventories disappearing, they are staring into the abyss of a default. They need a miracle. And the BCI rebalancing is the only miracle they have left. It is their only chance to create a smokescreen. They are hoping you will mistake a red candle triggered by a mindless robot for the end of the world. So here is my final instruction to you for the week of January 8th, 2026. When that phone rings and you see the name of your brokerage firm on the caller ID, when they start reading from that script about downside protection and rebalancing risks, hang up. Do not engage. Do not debate. And certainly do not sell. Do not let them talk you out of the only asset that is effectively immune to the debt collapse of the Western world. Do not trade your sovereign wealth for their dying paper promises. You have to have the discipline to look past the next 48 hours. The rebalancing window is closing. The robot is almost done selling. And once that selling pressure lifts, which is a matter of days, not weeks, the weight is gone. The beach ball is released from underwater. The price will not just recover, it will snap back with a violence that will shock the shorts. We are looking at a slingshot maneuver that takes us straight through 85 and opens the road to triple digits. The fundamental drivers haven't changed. The mines are still empty. The solar panels are still being built. The dollar is still dying. The only thing that changed was a line of code in a Bloomberg index. And that line of code is irrelevant to the laws of physics. This is a game of chicken. The banks are revving their engines, flashing their lights, and driving straight at you, hoping you will flinch. But their car is made of paper, and your tank is made of silver. If you hold the line, they crash. This is not just a trade anymore. It is a transfer of wealth. It is the wealth of the manipulators flowing into the hands of the stubborn. Be stubborn. Be the immovable object. If they push the price down to $75, thank them. And then buy more. Because in 6 months, when we are trading at $150, you won't remember the BCI. You will only remember that you didn't let them steal your future. This is veiled wealth. The hoax is dead. The target is locked. Hit the like button to warn the others. Subscribe so you don't miss the update when the slingshot fires. See you on the other side.